Let's get across the market open. Jonathan Takajina joining us from MPC Markets. Jonathan, welcome to Wednesday. Now, of course, we've seen that Middle East trade unwind quite substantially, obviously, with oil tumbling, markets on the move, equities, obviously, it's risk on with new records on Wall Street. What are you seeing?
Yeah, so it's been a quite volatile period, and we saw it like Monday morning when oil did spike up on the overnight, over the weekend action, but then it couldn't hold it, and then obviously the Tuesday night, Trump declared the ceasefire, and then the markets just priced in that the war was essentially over. So basically, a risk on anything that was bought into that war, that trade got reversed very, very quickly. So yeah, there'd be a lot of people that bought oil at the 70s and they're trapped long now. And here we are back at sort of the low and mid 60s, which is where it was before this all started.
Yeah, and obviously that's been reflected in what we've seen with those energy stocks at the same time. So,
Mhm.
what you're saying, if you're there, if you're bought, somewhat of a painful trade for you.
Yeah, absolutely. So energy in general, obviously we had the Woodside approval. Santos had been on fire, so that energy had actually been one of the better sectors leading into this actual events over the last week or so, and then it popped on that. So that did bring in some sort of fresh money trying to chase that momentum, and yeah, now they're caught short. So my prediction is those guys will be bled dry. That's what the markets tend to do. So yeah, if you're in there, and it's one of the harder things to do when you are actually investing and trading, is that you're better off taking a smaller loss than something that you could be stuck in for a while. But yeah, just in general, it looks like the market's pricing in that the war is essentially over. So yeah, lower energy prices going forward.
Now, that risk that we saw obviously presented, given what played out in the Middle East, you would say the safe haven players come in to favour. But we take a look at gold; it didn't really move dramatically, did it? So, what are you expecting with gold and those gold stocks at the moment?
Yeah, so just in general, when one of the things that I've learned over the years is that when the phrase is in the bull market, all news is bullish. So the fact that gold didn't make new highs, or it might have made a new high by a dollar or so, depending on the contract you looked at, but the fact that it didn't react quite bullishly and act as a proper safe haven during this time kind of just tells you that the market's fully net long at this stage, and we need to sort of bleed that action out. So, from what I've been reading, the central banks are still in there as a nice bid there, but apparently it's one of the more crowded trades. So behind the Mag 7, gold has actually been one of the more actual areas where a lot of retail is going in. One thing I do note is that Newmont in general is outpacing all of the gold Aussie gold miners at this stage. So while Newmont hasn't broken out to fresh new highs, it hasn't fallen as much as a lot of the Australian producers. So what that could be is just the passive flows that we see in the general markets. Because Newmont is the only S&P listed gold player for the US market, that's why there could still be a bid there, and that's why that's held up relatively well in comparison to the Australian producers.
Now, meanwhile, at the smaller end, Greatland Gold listing and a fairly decent premium on top of that yesterday.
Yeah, exactly. So it's done really well. That's one that a lot of my clients have been talking about, anticipating. From what I understand, in terms of evaluation and their ASICs, it's a lot cheaper than some of the more established Australian producers. So I think that should be a good play here. I'm a momentum player. It's obviously just the first day of trading, but if you look at its listing overseas, it has been on a good run. So I think that that should be a good one to add to your gold portfolio.
Now, Jonathan, speaking of listings, of course, Virgin rejoining the ASX after a hiatus of some 5 years or so. What did you make of that debut and perhaps its valuation at this point?
Yeah, so it came in at 290, and I think it closed around the 312. So yeah, anyone that got in on the actual IPO has done really, really well. from what I understand, it is going to be one of the larger caps. So it could be just like when Guzman or Sigma Health were initiated. What we're seeing is that IPOs are tending to be on the larger end of the scale now. So what that means is that anyone that has index buying to do, they have to add this to their portfolio. So I think that should be well supported going forward as those passive funds balance out their portfolios and add this to the mix.
Now, speaking of passive funds and passive buying, CBA, of course, being the benchmark there, look, hitting yet another record high.
Yeah.
Look, you'd be brave, wouldn't you, to call the top?
I think you keep asking me this all the time. It's like, would you buy here? And I keep saying, yeah, the momentum is to the upside. And like it just surprises me all the time. Like it's just like, oh, 185, oh, 186, oh, 187. And I think we'll be here at 200 going, oh, is it a buy now? And I think what the market has shown is that doesn't matter what's happening in the Middle East or what's out there, there is still a passive bid there to this market. That dip that we had in April, that was bought up, and we've had the largest, as some call it, the strongest bear market rally in history. We've had this disturbance in the Middle East. The market's made a few new lower lows on the daily charts, but then this was brought up as soon as there was a hint that it was over, and that just tells me that this bid is still there. So don't fight it. If you're long CBA, enjoy the ride. Don't take profits just yet because it looks like it wants to head on higher. And as I said, I think we'll be having this same discussion when it hits 200, maybe in the next few weeks.
Goodness. All right. And Jonathan, just news out this morning, Xero continuing its expansion in the US.
Yeah, so Xero is another one that's a beneficiary of that passive bid. Anytime that the market is rallying, Xero is one of the components that the market loves. This news will just fuel that bid. So yeah, more new high. It did make a new high. Yes, they pulled back a little bit, but didn't quite make a closing high. But yeah, I think the market will just take this news. And just in general, it looks like this market wants to head on higher. I see, for all intents and purposes, the S&P's broken at new highs. Nasdaq's, I think, within a fraction of new highs. That will continue. We're just below the 8,600 level. We did make new highs a couple of weeks back. So yeah, those numbers are going to be exceeded over the next coming trading sessions. So yeah, just enjoy the momentum if you're long.